I was really struggling to see how they can pitch this as helping young people.
It's gaslighting. Like, to me, they've done an amazing job trying to gaslight the young people.
So she goes from paying zero in tax.
Yes.
She's at uni.
Yep.
She's not earning much money. No. She goes from
trying to get ahead.
Trying to get ahead. She's put a little bit of money away.
Trying to get
saved.
this far ahead.
So it's reaching into testamentary trusts as well.
Yeah,
so
the death tax.
Super at 10% effective rate, 15% if you're a foreign investor, and then us Australians here at 30%.
Yes.
Why are we paying double than a foreigner?
Or some, if you're a foreign institution, no tax.
Well, it's more tax effective if we relocate outside of Australia and invest in Australia
100%.
than it is to live and be taxed in Australia.
Yeah. What is that? Is that socialism? Is it communism? Is it Marxism? I don't know.
Welcome to Talking Tactics with Mel Pikos. I recently sat down with Geoff Wilson, one of Australia's most prominent investors, philanthropists and shareholder advocates. Geoff is the founder, chairman and chief investment officer of Wilson Asset Management, a funds management firm overseeing billions of dollars on behalf of Australian investors. In recent years, Geoff has become a leading voice in debates around tax and retirement policy, spearheading a national campaign against the federal government's proposal to tax unrealised capital gains in superannuation. He is now a prominent face campaigning against Labor's planned overhaul of capital gains tax. I actually joined Geoff in his office in Sydney for this chat, and we discussed what these reforms could mean for investors, retirees, business owners, and Australia's economic future. Geoff Wilson, welcome to Talking Tactics.
Mel, good to be here. Thank you.
Thanks very much. Geoff, you've taken on Labor twice and you've won. Once with the franking credits in 2019 and then last year with the super tax. You've now got 130,000 people behind you with a petition and you're calling this one economic vandalism. Yes. Why is this fight the one that matters the most?
Back in 2018-19, that was just an illogical policy where you had four people that could have been the same age and they were getting different after-tax returns. It was just Chris Bowen and unfortunately Bill Shorten probably needed their head read on that. And you've got to remember, Shorten was a really short price favourite to win that election. I think the night of the election, I specifically sat down with my wife and said, look, I don't want to watch anything tonight because the Libs were, I think, paying $6 and I think Shorten and Labor was paying $1.20 or $1.30. Like they were a shoo-in. And effectively he lost the unlosable election. And part of that was arrogance, I think. And part of it, they could have quite easily just done a few things on that and made it logical. And then the number of people that were impacted back then, it was about 1 million people were directly impacted. But then what everyone realised, it was the retirement tax is what it was called at that point in time, and how everyone else was going to have, there was a negative ripple effect. In terms of the other, the tax on unrealised gains, which is, as Jerry Harvey said, stupidity of the highest order, taxing a profit that you may never make. With that battle, that only directly impacted 80,000 people because it was in superannuation. The risk is they were going to move it to other things in terms of what they've done recently. Now that we see what they've done recently, then there would have been a high probability they did that. And that was a hard one to convince people how bad it was and then get Labor to change their policies. But we did about, I think, 150 odd pages of detailed research. We worked hard with that. A gentleman, Matthew Cranston at the Australian newspaper, I think he did 25 front pages on it. So if you don't have people in the media that are calling it out, then it really doesn't resonate. And that was fortunate. Now this one, this how many people does it impact? There's 7.7 million Australians that own shares that's not in their super fund. So it impacts the 7.7 million Australians, 2.7 million small businesses. They are all negatively impacted. And really every young Australian, like I'm 68, I'm one of the boomers, I've lucked out. I'm grandfathered, I'm in the old system. Like it is, in terms, talk about...
it's really that next generation that's going to
they're just
cop the brunt of it.
Yeah, for the next generation. I've had a lucky run and no one else is going to have that luck.
Yeah.
It's appalling. Now, in terms of economic vandalism, the reason I've used that phrase is, you had the government and sitting down with the economic round table the latter part of last year, and the whole idea was to increase Australia's productivity. Now, how simple is it? If you, in terms of what we've been seeing recently, you increase the tax on houses, the price of houses goes down. You increase the tax on creating Australian businesses, of course, less people are going to create Australian businesses. What you actually want people creating Australian businesses. Now, we put a proposal, there was a Senate inquiry into the capital gains tax. We said drop it from 50% to 25% for property. If you're trying to discourage money going into those passive assets. And we said for Australian businesses, not listed on the stock market, that are owned privately, increase it from 50% to 75%. Because you actually want to encourage people to start an Australian business, to employ Australians, pay tax in Australia, and to pay them more. Grow the and if we, the big problem that we've got in Australia is, say, house prices have been going up by, say, 8 to 10% per annum, and wages have been going up by 3% per annum. So every year, if you're a young person, every year you don't buy a house, you're 5 to 7% worse off. You're not getting closer. It's getting further. Yeah. How can you have wages growing at a higher rate than the inflation of the growth in house prices? How do you pay someone more? Increase productivity. But they're doing, the last decade has been a disaster in terms of productivity.
Well, Labor's pitch to really try and address this issue is to tax on real gains and not on inflation. So where does this policy really diverge and become not really that sensible?
I mean, first of all, in terms of our position, it's in terms of what they're doing with housing, with respect to negative gearing and changing the capital gains tax on housing. We're not in that fight. What we're saying is on Australian operating businesses, you want capital, you want long-term capital, and do everything you can to encourage that. So that's our position. In terms of what they're proposing, and just to sort of take you through an example of how ridiculous it is, or actually maybe not ridiculous, it's just going to change everyone's behaviour. So people will still start. Well, first of all, people might think they won't start companies in Australia because they think, look, if I start a company and say I started off with, say I put $10,000 into a company when I was 18, I'm 68 now. Now, the inflation adjusted value for that $10,000 at growing at 3% per annum for 50 years up till my current age is $44,000. So that's my cost base. And say I happen to be lucky with that company and say I was worth, $5 million, say $10 million. So effectively, I'm going to pay 47% tax on the whole amount of money, except $44,000. Where in the current system, I only pay at half my marginal tax rate, which I'll be the top rate, which is 23.5%. So you're actually paying double the tax. If you're an entrepreneur, if you're a young entrepreneur in Australia starting today, you're going to pay double the tax that I had to pay. Is that fair? It's not fair.
Doesn't feel fair whatsoever.
No,
we have seen all these memes popping up all online with Albo superimposed in as the 47% business partner.
Correct.
Silent business partner that never turns up to any meetings.
Exactly. So first of all, I might decide, hey, I'm not going to do what I've done for a long time. So I'm not going to start a business, not pay myself. I'm not going to get all that sweat equity and then hope that it'll be worth something. And how many small businesses go under? What is it? Something like 60 or 70% of businesses fail in their first couple of years. Why bother?
I think I've heard 80% within the first 5.
Exactly. So effectively, what you're putting a big neon sign. Globally, you're putting a neon sign. It's the highest capital gains tax in the world. You're putting a neon sign. If you're an entrepreneur, if don't come to Australia. If you're in Australia, don't become an entrepreneur.
Do you think this is going to create a real brain drain?
Oh, enormous.
You're going to see people starting the next Atlassian or Canva in Singapore?
They'll try. And you talk about Canva, the finance, the CFO from Canva, he was quoted in the paper, he wouldn't have taken the job because he was given shares in Canva. If he was given shares in Canva at a very low price and they said, oh, you're going to pay 47% tax on whatever you make, then you're not going to... he won't take the job. I was having a coffee.
Capital is global, isn't it? It'll just go to where it's most efficient.
100%. I was catching up with a friend the other day who's in the tech space, and he had just had a coffee with someone he was trying to recruit to come down and work for him from Singapore to Australia. This is before the budget. He was negotiating with him, and I was talking to him after the budget. He was going to give him 5% of his company. Now he's got to give him 10%. Like, are you serious?
It's a lot to give away, and
well, you've only got 100% of the company. You can't give 200% of the company away because they're taking half of it. Yeah. So to me, that's just one little spot. The unintended consequences are so significant. Now in terms of companies, if you're an investor, in terms of investing in the stock market, you're actually not going to, as I said, the 7.7 million people that have shares that are listed on the stock market, excluding the shares in their super. All those people, if they've got half a brain, they should sell their shares. If they've got more than one share, sell them, because there's no adjustment for real losses. Say you put $100 into the top, we'll call it 5 banks, the top 4 plus Macquarie. Say CommBank has done incredibly well, $100. So that goes from being worth over a few years from $100 to $200. And say your cost base, inflation over that period of time is on average out to be 20%. So your cost goes from $100 to $120. So you've got 5 holdings, so your cost base is $600. And say all the other banks stay at at $100. So effectively you've doubled your money on Macquarie, but in real terms, you've actually lost money. But in nominal terms, it stayed at $100. So it's 120 as your cost base for all 5 of them.
You're going to pay tax on the massive gain, but you're not going to be able to offset the losses.
So you'll pay, yes. So you're going to pay, depending on what tax rate you're at. Say you're at marginal rate, you'll pay, say 50, let's say it's 47, but let's call it 50%. So you'll pay $40 tax. So you'll get $560 back, and your real cost will be $600. So in real terms, you've lost money.
Your winners are going to be so heavily taxed, and your losers are not going to be able to really offset it. So really, whatever gain you've got, you're just going to be paying a massive amount. So why invest?
Correct.
For the future in general.
So you shouldn't invest in shares.
So go and spend it instead.
Or don't invest in shares. So and like, we're major beneficiaries of this. I'm fighting against what we're a major beneficiary of, because we're a fund manager. So if those shares were in one fund that we were managing, the losses in real terms, they offset each other. Another negative is Jim Chalmers. I think there's 9 places on the legislation where he can make decisions. It's like nearly farcical. That we don't know the exact
level
rules.
Of control.
So in theory, people will put their money in ETFs, or they'll put them in pooled structures or managed funds. But you probably only want one ETF, or one listed investment company, or one managed fund, because you have the same problem. if you have 5 of them. So that's a significant change in behaviour. Also, another change in behaviour is for companies, all of a sudden tax-paid income or franked income becomes more valuable than capital. So
you're going to be chasing the Woolworths shares, the CBA shares, and you're probably going to be neglecting some of those big growth stocks.
So effectively, all the money will go to the top 200, and any of the smaller companies in Australia, any company that's a big growth company that doesn't pay out nearly 100% of their earnings will get disadvantaged. Or as an investor, you should not put your money there.
Yes.
So it is just It is a very complex.
So it's going to force a lot of
matrix.
companies to potentially look at more sort of short-term thinking as opposed to longer horizons and investing in growth of the business, employing more Australians, growing the pie.
All that stuff. Yeah. Why keep retained earnings for growth?
Yeah.
Because you'll get disadvantaged. Because effectively, I'll just give you a quick example. Say a zero tax. Oh no, I'll use a 47% taxpayer. If the company makes $100, pays $30 tax, then pays the $70 out as a fully franked dividend, then the individual taxpayer obviously gets the dividend. It's partly franked to $30, so they'll end up paying another $17 tax. So they'll get $53 in their pocket. Okay, if that company didn't pay that out, and so left it in the value in the company, and the value of the company went up by that $100. So it's got to pay the 30% tax. So there's $70 left, and then I'm the investor in that company at 47%. So I've got to pay 47% tax on that $70. So effectively, I'm paying effectively 62.5. I had that 32.5 plus 30. I'm paying 62.5% tax.
It sounds like it's just going to destroy growth in this country.
Destroy growth. If you invest for growth, you're a failure.
Well, and they've really pitched this
In terms of how they've set up they're encouraging everyone.
I'm really struggling to see how they can pitch this as helping young people.
It's gaslighting. Like, to me, they've done an amazing job trying to gaslight the young people, and they're hoping.
Do you think young people are waking up to it?
Oh, 100%, 100%. I've had more people contacting me on this. Like, the government will be kicked out of office in 2 years' time, or they'll carve out 100% of companies.
Yeah. This is really their
Australian
work
companies.
choices moment, isn't it?
This
is the policy that's going to kill the government.
It will, 100%. Like, everyone understands.
So what should we do for the next 2 years? Because it looks like they're just going to ram it through.
Fight hard. Yeah, fight as hard as you can.
Keep the momentum up and make sure people are aware of how these changes are going to affect them.
For franking for us, they announced it in March 18, and we fought it till the election the next year in May, and we were going to keep going. We're going to try to block it in the Senate. With unrealised gains, it was 2 3/4 years. Yeah. So, to me, we're ready for a 2 years plus fight. Yeah, it's got to be reversed. Otherwise, it'll destroy the lifeblood of Australia. It's nearly like we're sort of eating ourselves. It
does feel like the most regressive tax policy that has come out of Canberra for certainly a very long time.
And what worries you big time is, I don't know if you noticed, there was a quote from one of the Treasury staffers a week or so ago. They were talking about, say you invest in an asset and it goes up in value. They were saying the amount of tax, say the 30% or 40% tax that you should pay on that asset going up in value, the fact that you don't pay that each year means you've got an interest-only loan from the government. And that's why I'm pretty convinced they would have rolled out taxing unrealised gains to everywhere. Start in super and then roll it out everywhere, because that's that type of mentality. Yeah. To think that if you make some money on some shares and you haven't sold them, then the amount of tax that you would pay when you sell them is an interest-only loan from the government. Like, what is that? Is that socialism? Is it communism? Is it Marxism? I don't know. Or is it
probably
all three?
A blend of socialism and communism.
Like, to me, if that's what Treasury are thinking, then what chance have we got?
And can you talk to me about the compliance side of things? Because a lot of people have been equating it back to the 1985 model, whereby you had to go and get valuations on assets. What kind of compliance headaches?
Yes.
I mean, obviously the Howard administration's changes to capital gearing helped alleviate all that, and it seems like we're regressing back to far more compliance, far more paperwork.
But before we get to compliance, could I just want to relay a story. There was, I think, a 29-year-old I was chatting to recently, and they just got married and they're trying to work out what they're doing. They haven't got, and I said, look, what you've got to do is, they hear the noise. Everyone hears the noise. They don't know exactly where they fit in, what it means for them. And I said, look, what you've got to do is, the first thing you do is put in your own money, as much money as you can in your own home, because that's tax-free. And then the next thing you should do, and they said, well, unfortunately, we've only got a little bit of money. And what we're trying to do, we were trying to get enough money together to put a deposit on a house that we're going to negatively gear. We're both working, and we're hoping that would make a little bit of money, and then there'll be enough so we could buy our own home. So that's off the agenda now. Unless they buy a new build. The only problem is, of course, they're going to be paying too much for the new build.
Yeah.
Because it's a market. So if that's where you get the benefit, you can negatively gear, then a disproportionate amount of money will go there. People will pay the high price, and then when you sell it, you're not selling it as a new build anymore. You're selling it as an old one that can't be negatively geared. So you'll immediately, you probably got it. You'll lose some money. I wouldn't suggest anyone does that. And I said, look, what you've got to do, if you can't do that, you've got to put as much as you can into super. And they said to me, Geoff, well, like I'm quite young, and when
I can't touch it for
60 or 65.
Doesn't help put a roof over your head.
They said, how can I trust the government?
Yeah.
Now, how sad is that? Like, how incredibly sad.
I think it's a sign of the times, isn't it?
Well, but to me, it's like, it nearly breaks your heart that a young Australian wanting to get ahead can't trust the government. And I was talking to another gentleman, and he set up a business 50 years ago. Again, he was in the pre-85 rules. And then they've changed the rules on that. Like, how can you trust a government that changes the rules that have been in place for 45 odd years? Yeah. Like, it beggars belief.
Creates a real
Sorry, what was your question?
Compliance.
The cost of compliance.
The burden that it's going to place on the individual investor to really get their finances in order come tax time.
100%.
Because obviously there's quite complicated calculations.
Every listed asset, that's easy because the value is the value at the 30th of June next year. Every unlisted asset is a cost.
Yeah.
So you've got a choice. You can either have it valued, or you can use a splitting. So if I've owned the asset for a year before and I sell it a year after, then I get 50% in the old and 50% in the new.
Yeah.
What everyone will do, they'll want to get their assets valued. Because in theory, they want to get their assets valued at the highest price possible, because then they're in the old system for that. So what, 2.7 million small companies, so what does it cost? $10,000 of valuation. What's that? 2.7 billion in terms of costs. To me,
unproductive cost too.
Yeah, like in theory, who's going to make all the money? The lawyers, the trust deeds, the new trusts, or turning the accountants and the valuers.
I was talking to my accountant about it, and he said, "I'm busy enough. I don't need the extra work."
I know. It's appalling. The costs are. It's billions of dollars of costs. For what?
And say this does get overturned, it comes in, gets overturned in 2 years. What's the next 2 years going to look like while people are in this limbo phase where you've sort of got a foot in each camp? You don't really want to fully commit to the new system because you're very hopeful that it's going to get repealed on the other side.
Yeah, really sad, and it's happening already. Like I was talking to a gentleman, he works at a GP's office, and I said, how things? He said, literally, this is in Glebe, he works, and he said, the day after the budget, the attendance dropped by 30%. Like uncertainty, people don't know what's going on, they don't know what exactly to do. The worst thing you can do for an economy is have uncertainty.
Well, I think it's just going to be huge, isn't it? People are just going to be sitting on their hands, just watching and waiting. And
what do we do?
Yeah.
Yep. What do we do? Even the smart people. I was talking to a gentleman who's got his own business, and he was this morning, and he was saying, look, what do I do? Like, how do the trusts work? Should I have a fixed trust? because variable trusts, they're going to get taxed more. Should I have a fixed trust? Should I put currently I've got a trust that goes into a company. I was at I do a little bit of cycling. I was at the cafe on Saturday. The lady who was serving, I said, look, is the boss here? And I went and had a chat to the boss. And I said, what do you think of the budget? And he said, it's appalling. Now, you've got to remember...
I don't think I've asked, any business owner I've asked, no one has been happy with it.
Yeah, like he's a small business owner and he probably earns, 150, 200 grand a year. He would have done what his accountant had told him to do, is put the money in a trust. He probably pays his wife a little bit of money out of the trust. The problem is they're getting all the aspirational people, they're getting all the hard workers. It's the people that are on the ladder, trying to get up the ladder, that they're actually just burning the top of the ladder. They'll never get there. Where the people that are at the top, they're just guaranteeing they're there. Like, to me, it's appalling.
It is appalling. I want to talk about the minimum 30% floor that the government's put on. I've got a real example here. We've got Maya, who's a 20-year-old uni student. She earns about $15,000 a year, so she sits under the $18,200 tax-free threshold. Years ago, she put a small amount into shares, around about $5,000. Those shares are now worth $9,000, so she's had a $4,000 nominal gain. Say inflation accounts for about $500 of that, so her real gain is $3,500. She's not on any Centrelink income support. Under today's rules, the 50% discount and on the various tax brackets, her $4,000 gain is halved to $2,000. Added to her $15,000 of income, she's earned $17,000. So she's under the tax-free threshold. CGT payable, $0. So everything's working fine for her. But from 2027 onwards, when indexation plus the 30% floor comes in, indexation trims the gain to $3,500, but the 30% floor overrides her low rate. So her CGT payable is $1,050. So she goes from paying zero in tax.
Yes.
She's at uni. Yep. She's not earning much money. No. She goes from
trying to get ahead.
Trying to get ahead. She's put a little bit of money away.
Trying to get this far ahead.
Exactly. Yep. And presumably, one day those shares will get cashed in for a deposit, which is, what a lot of uni students or people in their 20s really start to do, to start accumulating some wealth. Yep. And then they cash it in, and of course it gets to their marginal tax rate. Yep. But then this is really hammering those people hard, isn't it?
It is unbelievable.
But the very people this is really trying to help, it's penalising.
100%. But
I just can't get my head around why they think this is a great idea.
It is so sad. It's sad for those young people. And it is just so unfair for them. And anyone who's watching this, please sit a young person down and try to explain to them how it works. One of the great things about young people today, and they're the lifeblood of Australia, and we know that's the future of Australia. And so you want to actually encourage them to take risks, to be entrepreneurial.
Have a crack.
And like when I was growing up, I didn't know anything about the market. I remember I was at uni. I think one of the girls there, her dad was a stockbroker. I didn't know what a stockbroker was. I didn't know what a stock market was. These days, because of crypto and Bitcoin, they understand markets, which is exciting. So they bought ETFs. I was just lucky that my dad happened to own some shares. So that's how I learnt about the stock market. But there's a disproportionate number of young people that are doing that. Make a little bit of money, and invest that money in ETFs, and then can use that. But now they're getting their legs cut off.
And the government's just telling them, we'll put it in super. And if I read a lot of the comments, a lot of people are parroting these lines that Jim Chalmers is out there saying, which is, we'll just get them to put it into super. But how does super
and we don't trust you. I mean, you lied last time, and
it's not helping someone in their 20s, right, who wants to eventually buy a house, at least secure the roof over their head, and then presumably go on and invest surplus capital off the back of that. But I'm failing to see why that would be a sensible strategy, because you can't unlock the money.
There's no incentive to have capital growth. the only capital growth you want is around inflation, because then you pay no tax, and the incentive is to get fully franked dividends. To me, it's really it's changed significantly, and unfortunately, if Labor win the next election, that'll be the end of franking credits, because sort of a hand grenade that we haven't talked about yet, that's in this, it was in the budget, was the tax they brought in on trusts. So if a trust's going to pay 30% tax, and that's not franked. So if that trust pays 30% tax and then distributes the other 70%, then distributes the other, gives a 70% distribution. If it was a company and it went to a charity or someone that didn't pay any tax, they get 100% back. If it's a trust, you only get 70% back. So what they'll do is, if Labor win the next election, and Paul Keating, I think he talks about that if it wasn't for him, he was fighting Treasury to get removal of the double taxation. But in trust, there is double taxation now, the 30% tax on that. And he wrote an article in 2013 that said every 7 years, Treasury try to get rid of franking because they don't like they don't like it. So effectively, when the next election, if Labor win the next election, they'll say, look, we've got two systems for paying tax in company / trust structures, and one is not franked and one is franked. We've got to make them all the same. They're not going to make this franked because they purposefully have made it not franked. So that's the end of franking. So to me, pretty much what Bill Shorten tried to get through and lost the election in 2019, which was negative gearing, franking and capital gains tax, by the next election they'll have bought them all in. Then they'll tax.
Effectively, they brought it in by stealth.
Yeah, 100%. They just lied and then bought it in, and then they'll tax the family home. They'll probably do that at a level, and they'll take more money from super. They'll make super less attractive. That's what you're looking at with this government. Now, everyone gets a little bit down to the dumps when I explain that to them. The fact is, we can change it. And that's what we're actually seeing. We're seeing at the moment a real rebellion by what's happening with One Nation, of people that have just had enough. Scott Morrison, Labor sort of targeted him with lying, and he lost the election. Now you've got Jim Chalmers lying to the electorate, and Anthony Albanese lying to the electorate, and they will lose the next election. We've just got to make sure they do lose the next election, or they carve out all Australian companies.
Well, I think that's it's probably more the first bit. Make sure that they get out, because I just don't see them backing down at this stage.
No, they're not going to back down. No. They won't back down. Sorry, I say they won't back down, but I probably would have, if you'd asked me about unrealised gains, I would have said, like Jim Chalmers, he was 100%, he is not going to back down. And a lot of people pushed him hard, and he said he's not going to back down. In the end, Albo made him back down because they were going to lose a significant amount of seats. Now, we did some analysis, I think electoral vulnerability, some detail. There was about a 20-odd page report that showed that they were going to lose 29 seats. The Greens would lose one, and they'd lose 29 seats. And I think that hit a nerve. And if I was in any marginal Labor seat, I would be putting as much pressure as I could on the government, because you're going to lose it at the next election. You lose your job.
Yes. And back to the 30% floor. So it's reaching into testamentary trusts as well.
The death tax.
The death tax. So the vehicle that families can pass on things like family farms, home, assets, farms.
And businesses. So
it's a death tax by stealth.
Correct. Death tax by, there's talk that they're going to do something there. There's talk that they're going to do something on the technology companies or startups, but who can you believe? You can't believe, unfortunately, the Prime Minister or the Treasurer, because they've lied to us before.
Yeah, exactly. And whatever changes now is probably going to be different if they get back in. And there's the next round of changes that no doubt you'd have to continually fight for. The other thing I can't really get my head around is that the varying capital gains tax rates that you pay, whether it's super at 10% effective rate, 15% if you're a foreign investor doing it via a managed investment trust, and then us Australians here at 30% as individuals.
Yes.
Why are we paying double than a foreigner?
Or some, if you're a foreign institution, no tax.
Yeah. I don't understand how we're taxing foreigners less and Australians more. Where is there any logic in any of this matrix?
Well, the only logic would be is you need some capital.
Yeah.
So as you said earlier, like capital finds its way. So if everyone in Australia sort of withdraws their capital from a certain segment, then it'll end up being owned by the international guys.
So it's
but do we want? We probably don't want it to go back to where we were 200 years ago, where all the capital came from the UK.
Well, it's more tax effective if we relocate outside of Australia and invest in Australia
100%.
than it is to live and be be in Australia.
Yeah, I know.
That's the distortion that just doesn't make sense. That we're willing to tax foreigners less and our own people double.
I totally agree. Yeah, it's a very sad state of affairs.
All right. Well, this is the scorecard, so I can't let you go without putting yourself into my chair. So a quick overview. S tier is growth positive and credible.
Yes.
Then we've got A, B, C, and all the way down to D tier, which D tier is actively destructive. It shrinks the pie and punishes aspiration.
Yeah.
I'm going to put each player to you, each political player, and then I want you to tier them in a line as to why you're putting them in that category. I'm going to start with Labor's budget, the CGT overhaul itself. Where does this land?
Okay, so the fact that they put in businesses, which is part of their strategy, Australian businesses. So S is the highest and D is the lowest, hypothetically. I'd give them F.
Even lower than the scale.
Yeah, like destructive, like really consciously destructive.
Yeah.
So to me, I'd like to put them lower than that.
Yeah. And what about the coalition? They've come out saying that they're going to repeal the lot and index tax brackets with the tax back guarantee.
I was impressed with the coalition. To me, before the last election, the coalition had an enormous opportunity to really push the insanity of the tax on unrealised gains, but they really didn't get behind that enough. I think so. I was a little bit worried that they might be a bit wishy-washy. So I'd give them close to the top tier. A is
S is the best.
S is the best.
And then A is.
I would probably I'd have to analyse what A and S mean, but they're right up there in that grouping because the indexing of the personal income tax levels, to me, I think that's really progressive.
So
and
as
of
close
course,
as possible as good.
Winding back everything else.
Yeah.
All the insanity.
Well, that's definitely a no-brainer.
Yes. Yeah.
What about One Nation? So they've said anti-tax, negatively gear up to 2 properties, slash migration, ban foreign ownership. Where do they sit?
Oh, see, the banning of foreign ownership, to me, like
on house prices.
Foreign ownership on
housing.
On housing. Yeah, like, geez, I'd really have to me it's up the top there. I'd really have to sit them both down. I think they were talking about 20% on capital gains tax. I actually quite like the old system because if you paid no tax, then, or if you're on a low tax rate, then you didn't pay, you paid half of your tax rate.
Yeah.
Now, if you're on a 10% tax rate, then you only paid a 5% for your capital gain. If you're on the high tax rate, the 47%, then you pay a lot more. I like the progressive nature, so I'd probably put the coalition a bit of, just a fraction above them.
Yeah. And probably no points for guessing this one, the Greens.
Yeah.
So their problem is Labor didn't go far enough with these tax changes, and so that abolished the discount completely and negative gearing outright. Where would you rank them?
Yeah, well, to me, they were, and they sort of, the interesting thing is they've come out, they've seemed to got behind the coalition now. To me, they were going in the wrong direction early on.
They seem to be doing some kind of trade with some of these NDIS cuts and reserving, I guess, some of their political capital to the coalition to assist with not getting the NDIS cuts through. But of course, the trade-off is that they've got to hold back.
I was a little disappointed. Initially, I was a little disappointed with them. They had a real opportunity, even though their vote doesn't matter. They had a real opportunity to stand up and be incredibly pro-business. They've tended to be a bit more pro-startup or technology. That's what it appears. So I'm a little disappointed. I was very pleased that that one of the Teals put a submission into the Senate inquiry, which I think is very rare for a sitting MP, Kate Chaney from Western Australia. Put one in, and she was talking about carving businesses out, and that's the language we've been talking. But to me, if they'd come out, I know Allegra Spender had a sort of a tax summit. If they'd been a bit clearer,
we'll give them a ranking as well, the Teals, and I think it will probably focus more on Allegra Spender because she probably put the most amount of work in.
Like to me, it would be unfortunately it's below the other two.
Yes. So where do you think someone like Spender's pitch, which is a revenue neutral package, trim the discount, curb negative gearing, fund income tax cuts? Where do you think
to me, the interesting thing is what we're trying to do. Like, how do you get those people that are going backwards every year in terms of with the 3% inflation or wage growth of 3 or 4%? But the house price going up 8 to 10%. To me, it's got to be productivity. Okay, maybe you can do some, wage cuts can be a little bit, but long term, it's got to be productivity. So I was actually disappointed that there wasn't a little bit more in productivity. Like the proposal we put to the Senate when they're having a look
well, let's hear from you. What does S tier look like in your eyes?
Well,
what is the ideal policy? Where, if you were advising government and you had the capacity to tell them, hey, this system that you're introducing, it's no good.
Yes.
This is what I would do to actually grow productivity, grow the economy, allow businesses to invest. What does the best possible scenario look like in your eyes?
And let me put a caveat: is I have no interest in politics. And I have actually no interest in doing this and fighting for what I think is right. The unfortunate thing is in 2018-19 we had to. We had to do it on unrealised. And actually I mentioned, I think, Matthew Cranston at the Australian, their economics editor. He rang me and asked me, he said, have you got a position on capital gains tax? This is when the Green Senate inquiry was happening. And I said, look, hey, I'm franking. Unrealised was insanity. I bought into that. I don't necessarily want to get involved in just capital gains tax on properties. That's or negative gearing. I don't want to buy into that. And he said, come on, you must have a position. Anyway, I checked with the Greens because they were running the, and like to me, I think the Greens are great. I've worked really well with the Greens. They understand the importance of dividend imputation. They were very positive with some of the work we did there. And with the unrealised gains, they were really focused on the indexation. They didn't have a strong position on the actual unrealised gains. They were focused on the indexation of the caps, which we succeeded on. So in the end, I ended up appearing at the Senate hearing. And what we said is, this is with a 50%, we said leave it at 50 for most assets, but with property, which is sort of a passive asset, it's not like a company which can grow from one employee to thousands and pay a lot of tax and employ a lot of Australians. We're happy for that to be dropped, say dropped to 25%. But whatever, in terms of revenue neutral, rather than giving it to people as a tax cut, don't you want more? If our problem is productivity and our problem is capital deepening, and we had this big round table about trying to work out how do we become more productive, then don't you try to encourage people to start more Australian companies, more Canvas, more Firmuses, more Atlassians, and then our strategy was give them a 70. If it's listed on the ASX, it stays at 50. But if it's a operating company that's not listed, then make it 75%. So you want to go and start your company, and then we've got vibrant entrepreneurs rather than what unfortunately the government's doing now is trying to drive them out of town.
I 100% agree with you. I definitely think that the government's got the messaging wrong, and it's starting to be picked up by a lot of people across Australia. The opinion polls have certainly showed that. And you've mentioned the rise of One Nation, and really I think a lot of that is discontent
I think so.
with the current financial climate. People do feel like they're not getting ahead, that house prices are getting away from them, or at least the opportunity to be able to grow their own wealth. And I think, as the boomer generation, as you put it, can see that the young people are going to get locked out of the system and not be given the same opportunities. It really is pulling the ladder up from behind them.
Yeah, or burning it halfway. Yeah.
Yeah.
I mean, it's shocking. And if anyone who's watching this, if they can just talk to one or two young people and get them to understand the negative impact, how it's going to impact them, then we've got a chance.
I think so. It's really going to be largely a grassroots campaign, isn't it?
100%.
It has to be people educating the younger demographic as to why this is absolutely catastrophic for their future. And I think you and I can see why this is going to negatively impact them, but it seems like a lot of people are still blissfully unaware that this is a catastrophe that's going to get unleashed on them.
No, I agree 100%, Mel.
Geoff Wilson, thanks for talking tactics.
Thank you very much.
Cheers.
I want to give a huge thank you to Geoff Wilson for sitting down to chat with me. I appreciate him sharing his perspective and his arguments for why the proposed changes to the capital gains tax discount deserve serious scrutiny. As this debate continues, it is important that these reforms are properly examined and that the potential impacts on investors, retirees, small business owners, and especially the young people of Australia are fully understood. And I'd love to hear your thoughts on the proposed CGT changes and whether you also think that they went too far, or are they a necessary reform? Also, you may have noticed I've updated the format and style of Talking Tactics. Both this podcast and the YouTube videos will be evolving into something a bit different to what has been previously. And I'm keen to hear what you think of the new approach. So please drop a comment and let us know your feedback. But that's it for today. I'm Mel Pikos, and we've been talking tactics.